What's up, HyperFast Nation? On this episode of the show, I sat down with someone who's got over a decade of experience in real estate. He started his career doing wholesaling, flips, has since created a private lending group called We Lend LLC. He's financed over $500 million in real estate and puts out amazing content on social media. Welcome to the show, Ruben Izgelov. All right, welcome to the show today, Ruben. How are you doing?
Doing very well, Dan. Thank you so much for having me.
All right, well, I'm excited to have you on the show today. Why don't you give our listeners a little bit about your background before we start here?
Yeah, absolutely. So, I am Ruben Izgelov, managing partner at We Lend. We are a private-based lender, catering specifically to real estate investors on their short-term bridge financing. Our client base are really experienced real estate investors who are buying properties with a value-add component and then either refinancing them to hold in their portfolio or selling the property for a quick flip. Before, founding WeLend, I was, in the business myself, buying, selling, flipping, developing real estate. And, thankfully, within time, was able to grow not only my portfolio, but also my capital resources to be able to start WeLend. And the only reason why we did that is because we felt like there was a lot of gaps in the industry. We felt like that there was a lot of value that we can bring to the space. And that's exactly why we spearheaded in founding WeLend.
So what motivated you to want to go from, buying and flipping deals or holding them on as, monthly income type deals? What made you want to go from that to lending? Because it's different for sure.
Yeah, it is. I mean, look, I guess just to kind of go a little bit, fast, or rewind a little bit. I mean, look, we came to America in the 90s, we immigrated to America with very little to our name. So, we felt like there was this American dream that we always have to strive for, and we always have to continue growing and can never stay in one place. So I think that thirst, that hunger to continue growing was one of the reasons why we always, continued to evolve into newer and better things. Like I said, we came to America with very little and we're able to build, a small, I wouldn't say empire, but something that we can definitely be proud of. I entered into real estate kind of coincidentally to even begin with. One of my cousins was in real estate himself, and I was a 13-year-old boy. He asked that I visit, houses with him, door knocking, what have you, just because it was easier for him to get the doors open when there was a 13-year-old boy standing in front of the door versus a grown man. And that worked out well, and I was able to see the type of, money that he was making, and it kind of always in the back of my mind, I said, all right, real estate is the way to go. Thankfully, I listened to my inner self, my little self, and I entered into real estate. But back to your point, as far as, why buy real estate, rather why lend on real estate versus buying real estate. Look, I think for us, it's all a matter of security, right? We as lenders, we're a lot more secured in a loan than if we were, say, equity partners, or if we were to say, buy the property ourselves. I mean, as a lender, you're the first one in and the first one out as far as being paid off, and you're secured because you're secured by capital, by United States real estate. So, I think that the answer to your question is really because of the security that is behind, being a lender, along with the returns that you're able to generate through the lending capacity.
And you're not. It doesn't sound like you're in the deals for long. You're more of a short term lender, so you're in and out of these
Our
deals
average,
in a secure way,
exactly.
making good profit, I assume.
Absolutely. So, the average duration of our loan, term of our loan is about 11 months, 11 months and 2 days. That's the average, which is great because from a security standpoint of view, if there's any shift in the market, I mean, we're in and out of these loans. There has to be, again, the likelihood of this being a huge shift within 11 months is, again, very slim. So we're in and out of these loans very quickly. And a lot of what we do is, we're not holding these loans on balance sheet. There are some loans that we do hold on balance sheet and many we do not. What we ultimately do is we trade these loans to larger hedge funds and private equity firms, many of whom are backed by, KKR, Goldman Sachs, Blackstone, and what have you, who are ultimately then securitizing these loans on Wall Street. Now, from a borrower standpoint of view, we are still the face of the lender of the loan, right? We're still the ones interacting with the borrower. We're still the ones issuing construction draws and servicing the loans. So nothing changes on the borrower end. But from our perspective, not only are the loans short-term duration, but we ourselves are in the loans short-term as well.
So, and you're getting them off your books rather quickly, I assume.
Yeah, I mean, the average is probably right around 5 to 7 business days where we're in and out of a loan. Yeah. And the upside there is that not only are you mitigating risk by being in this loan, by selling the loan, but you're also capturing a higher yield, because what we're doing is ultimately when we sell the loans, we're capturing a yield on the rate. And if you take that, let's just say hypothetically speaking, let's say we're capturing a yield of about 2% on every single loan, and you do that, I don't know, hypothetically speaking, 12 times a month, that's about a 30% return on an annual basis. Some of my real estate investors, borrowers themselves, they're not capturing 30% returns anymore. They used to, but with supply being the way it is today, a lot of our investors, if they're capturing or hitting a 10 to 15% return on their investment and they're in the project, they're the ones, getting their hands dirty. If they're capturing 10, 15% returns, they're super happy. Whereas, on the lender side, it's a lot easier for us to hit a 20, 30% return because of our strategy and because of the risk mitigation.
And that's because of the points you charge on the loan.
So our average rate. Yeah. So look, I mean, we just to kind of give you some backstory as far as the programs that we have. I mean, we go up to 90% of the purchase and 100% of the construction. Most of what we do is residential. I would say all of what we do is residential. So it could be anything as small as a single unit all the way up to 250 units. It could be somewhere in New York. It could be somewhere in Alabama. So we go up to 90% of the purchase, 100% of the construction. The construction is not issued or dispersed at the closing table. It comes as a reimbursement to the borrower. Now, our rates start at 7.99, and we do charge 2 points at the closing. But when we're selling the loans, we're selling them with a ability to capture an additional, other than the points, an additional about anywhere between 1 to 4% yield on the rate that we're selling.
All right, and who is your typical client, ideal borrower?
Yeah, so look, most of our business today comes from real estate agents and mortgage brokers, right? They're the ones on the front lines. They're the soldiers with the boots on the ground. They come across a lot of deals where their buyer or their borrower can't get the financing through their lender or through their network. So they come to us. So a lot of our business comes from real estate agents and mortgage brokers. But our borrower base are really the experienced real estate investors, the ones that are actually looking at this from a business standpoint of view. This is all they do. They buy, sell, flip, develop, what have you. I'm not sure, if you've ever been at a foreclosure auction, what have you, you see all the guys bidding at properties, at the foreclosure auction properties and what have you. Those are our borrowers, right? Many of them, a lot of times you see them buying 10, 15 properties on a monthly basis, or at least you used to before COVID, now that all the foreclosures kind of stopped. But they're buying 10, 15 properties on a monthly basis. And the question is, where are they getting all the financing from? Or where do they get all the capital from? And it's lenders like ourselves who are backing them up.
Hey, hold that thought for a minute. Do you want to take your real estate business to the next level? If you do, there's no reason to go it alone. Learn from people who've been where you want to go. Carrie and I have sold billions of dollars in real estate. We've netted over 7 figures for 7 years in a row now, and we want to see if you would be a good fit to work for us. We don't work with a lot of people, but we want to give you a chance to get on a free strategy call to see if we can help you get your business to the next level. Go to hyperfastcoach.com and apply for your discovery session today. Again, that's hyperfastcoach.com.
Yeah, no, it's amazing service that you offer. How did you recognize that this opportunity was out there, and then make the switch from being, the owner or the operator or the equity partner to the lender? Like what sparked that
It's actually
idea in your head?
very good question. So it all happened coincidentally. I mean, I feel like everything in my life happens coincidentally, but it happened coincidentally in the sense of, right after law school, I actually wanted to be an attorney, and I thought I was going to be the best attorney in the world, but quickly realized after 2 weeks from graduating law school, I'm not an attorney, taking on all the student loan debt and the whole nine. It took me 2 weeks after law school and graduating the whole nine to realize I'm not an attorney. I wish I realized sooner, but then again, things happen for a reason. But right after law school, I found out there was an event somewhere in Arizona, a private lenders event where all private lenders and hedge funds and private equity firms get together. And I thought, it would be a good idea for me to go out there and meet a bunch of private lenders, because I thought I can find a cheaper source of capital for my own deals. At that time, I was buying, selling, flipping, developing real estate. And when I went in there, I met with a number of private lenders, but I also met with a number of hedge funds and attorneys that kind of introduced the private lending business side of things for me. And I was listening to a speaker. He was kind of breaking down the math. He was breaking down all the risk mitigation tools that they use and what have you. And I was sitting there with my brother. I had a napkin in front of me, literally back of the napkin type of math. Quickly realized that, look, you can potentially be hitting 30% plus returns being a lender. Why are we sitting here going crazy, operating the way in which we're operating, looking for deals to buy and hitting, 20% returns and being the first, person to be on the waterfall to be able to lose our capital in it in a deal, when I can be a lender, be hitting 30% returns and be, the first person to take my money out when the deal is paid off. And that was my way of entering into the space. And I think that was in March of 2018, and in April of 2018, we made our first loan and never looked back since.
How did you go out and get the investors and financial backing to do this?
Yeah. So a lot of it started with our own personal capital and some family capital. And that's kind of how we snowballed it, right? It just personal capital, family capital, and then friends and family. And ever since then, it just grew. And, your friends and family, they refer other people over to you and so on and so on. And that's kind of how it snowballed. Thankfully, we're always raising capital. We're always out there trying to bring in more investors and raise more capital, because our loan volume is growing considerably. So as the loan volume continues to grow, you need to continue raising capital, and we're always in a capital raising mode. So not the purpose of why we're here. I know the purpose of why we're here is just to kind of introduce WeLend and what have you, but we're always in a capital raise mode.
Well, I think it's it's good information for people to know.
Yeah.
Like how are you, able to do this volume? Like, so not only is it good, I think, to talk about your ideal clients, but then your ideal investors. Like who, what's the type of person that typically, invests in your company or backs these loans?
Yeah. So, it has to be an accredited investor. The definition is it's very convoluted, and it's 5 pages long, but essentially it just means that it's someone that has the wherewithal to be able to, has the knowledge to be able to invest and do so wisely, but also has the net worth to be able to invest into a fund where I believe it's about $1 million net worth combined with your wife or your other significant other, along with a $200,000 to $300,000 gross salary on an annual basis. So that's what an accredited investor is in a nutshell. And all of our investors are accredited. And look, I mean, at the end of the day, although we're always on a capital raise mode, our business strategy, because we're selling our loans and we're able to replenish them through warehouse facilities or what have you, we're able to not have to continuously raise, because we're always replenishing our capital through selling our loans or putting out a facility. But it's always good to have sufficient liquidity to be able to continue funding the loans and do so in a quickly manner.
What do you do to go out and if you're going to recycle or the capital like that, you've got to have a really good pipeline of
Yeah.
clients. What do you
Yeah.
do to ensure that? Is it builder driven, realtor driven? How are you going out and ensuring that flow of business?
Well, look, I mean, we've been in business since, like I said, April of 2018. So this month is our 4th year anniversary. But we didn't start with the same volume as we have today. The way in which we actually started bringing in business is right here, our phone, right? What we were doing is going into our phone book, reaching out to all of our competitors, our friends who were in the business, and we were competing against properties together and saying, look, I'm out of the business, no longer buying property, I'm now lending on it, right? Give me a call, love to finance your deal. And that's kind of how it snowballed for us. But ever since then, it has just evolved, right? Us outside of our phone book and our network, today it's all about social media, right? It's all about making sure that the borrowers that come in and do one loan with us, they come back and do the next 10 loans with us as well. And I would say a good 70% of our business today is from returning borrowers and or brokers, right? Real estate agents or mortgage brokers. They love our process. We make it as easy as possible for them not only to be able to make a penny on the loan when we're funding a loan for their client, but also be able to make them look good in the sense of getting the financing that their client needed in a very quickly and easy manner.
Who are you or what are you doing on social media? Because you mentioned that, right? Are you doing anything different or
Yeah.
special or unique there?
Yeah, I mean, look, you won't find a lot of private lenders on TikTok. So, we were one of like the first private lenders on TikTok, making those silly videos out there, and it works. Look, don't get me wrong. There's a very young crowd on TikTok, but there's also a very seasoned crowd. Borrowers, investors, real estate agents, brokers who are on their pastime on TikTok, and what we're doing is essentially issuing and putting out videos that are not only informative, but they're also educational, right? It gives the listener, the viewer, the information that they've been probably looking for, but never really had the chance to look up or find that information. And we put it in very small bite type of videos, sometimes 10 seconds, sometimes 30 seconds, and sometimes 2 minutes, kind of outlining the process of what it takes to find a good deal, what it takes to make sure the deal makes sense, right? How do you go out there and start buying real estate? What you need to look out for when you're speaking to a private lender, and so on and so on and so on. And those are the type of educational, informative videos that we put out there, not only on TikTok, but on Instagram, on Facebook, on LinkedIn, that helps us bring in, the business that and the volume that we have today. But also, it's not all a matter of social media. It's all a matter of service, right? You can get the client in or the person in and inquire about a loan, but unless you're able to provide the service and answer the questions that they need answered, who's to say that they're ever going to do a loan with you? Or who's to say that even if they do one loan, that they're ever going to come back for business? And we pride ourselves in the fact that our returning ratio, repeat returning borrower ratio, is at almost 70%. We're very proud of that, and that's all due to the service that we provide to our borrowers.
Yeah, that's a great percentage of business to have. That comes from repeat clients and referrals. What's your screen name on TikTok and Instagram? Like, how do people find you if they're listening or watching this and want to go check it out?
Yeah, our handle is at We Lend LLC. So WELEND LLC. That's our handle on all of our social media platforms, TikTok included. A lot of times when I say that, people crack a smile because they're not used to a private lender, a real business, an institution being on TikTok, and here we are on TikTok making videos and having fun with it. So TikTok, Instagram, Facebook, LinkedIn, it's at We Lend LLC.
Yeah, it's always interesting the niches you'll find on there. I've seen a couple conventional loan officers, but I haven't seen or don't remember seeing a bunch of private lenders on there yet. So
yeah.
So I think you're in a good spot if you're making good content there, and not too many other people in your space are.
Absolutely. I think today we have about 20,000 followers on TikTok, and it's growing, and I'm super proud. I mean, on Instagram, I think we have about 16,000 followers. So it's definitely a good problem to have, and many of them are borrowers or clients or people that we've spoken to. So they're definitely watching us and following us, and we're proud to provide them with the material that they've been looking for.
Yeah, I think there's a unique opportunity on TikTok specifically to grow organically. It's hard to get that same type of growth on the other platforms, and it's here now. It may not be around, a lot longer.
Hey, hold that thought. Do you want to get 100 tips for free from my best-selling real estate book, The Hyperlocal HyperFast Real Estate Agent? If you do, go to HyperFastTips.com and you can download 100 of my best tips today. Again, that's HyperFastTips.com. You can download 100 tips on how to grow your business, get more clients, deliver more value to more people. Go to HyperFastTips.com.
Yeah.
If the history repeats itself, you see these platforms come up, and they're eventually at some point they focus more on monetizing, and then it gets harder to grow it organically. At that point, it becomes basically pay for play.
Yeah, exactly. I think the biggest issue that we're facing with say TikTok as an example is the viewers, right? They're young teenagers, sometimes late teens and early 20s, and their first time, or they're not first time investors, but they're just looking to learn more about real estate. And the question then becomes, is it really a waste of time today to be dedicating your time into TikTok or social media platforms? And I would say, many people in the industry, when I speak to them about social media, they think that it's a waste of time. These are usually seasoned guys, big wigs. They look at me and they're saying, "Why are you on social media?" And I think it's an investment perspective the way I look at it is that, as far as, look, yeah, these guys, they might be in their early 20s, late teens. Yeah, they're not ready to buy today or flip today, but guess what? We have their ear. And, when they're going to be in their mid 20s, early 30s, they're going to be thinking of WeLend when it's time for them to start buying real estate for private financing. And it's an investment for us to be able to start today rather than being too late to the game.
Well, I think it makes a ton of sense. Ruben, this has been amazing. I always like to end with a hyper-fast round if you're ready for some rapid-fire questions and answers here.
I'm always nervous about those because you never know what you're going to ask and you never know what I'm going to say. So let's go for it.
What's your biggest piece of advice to a new real estate investor?
Take it slow. And just because it goes slow doesn't mean that it's not going to go fast later on, right? Definitely partner up with someone that has experience. But if you can't find someone that does have the experience, do what I did, right? I actually was using private financing on my own deals, even on deals that I did not need financing on. And the reason why was because my private lender was an old school guy. We're still dear friends to this day, although we compete against business. But you know what? He provided me the service and the guidance and the education that I needed, and the network. He introduced me to a ton of people that was able to help me propel to the finish line a lot quicker. So although, you can't find someone that has, that experience, definitely use a private lender to help you guide you through the process of investing.
What is the most common mistake you see investors making?
They think they're going to sell the property for a lot more than what they're actually going to sell the property for, right? Look, I love realtors. Our business is based on them. But many of them, realtors wise, they expect a value a lot greater than what it truly may manifest to at a later point. And, first time real estate investors, again, they believe they believe realtors, they believe other professionals who are in the business to sell them something that, again, they're incentivized to sell. So the one thing that I would say is, be careful, make sure you're doing your own comps, make sure that the deals do make sense. Use spreadsheets, don't use a calculator, and don't think, the small minute fees are not going to eat you alive. They damn well and may eat you alive. But aside from that, also under budgeting, I see that a huge mistake. First time real estate investor comes to me and says, you know what, the project only needs $40,000 worth of work. You ask them for pictures, or you send your inspector out there. The property needs $140,000 worth of work. So be very careful with valuing your scope of work and your cost to renovate the property, especially in today's market.
If you had to start all over and you could not take your money with you or your network, you could just take the knowledge that you've gained over doing this for many years, what would the first thing that you do be?
Dan, that was one of those questions that I was afraid that you would ask, because those are the questions that I needed time to think. But I think the only thing that I would do if I did not have the resources is do exactly what I did in the past, right? We started with very little and very humble beginnings. And the way in which we started with real estate is by wholesaling. We were finding properties that we were able to enter into contract with and ultimately wholesale the properties over to real estate investors. The number one problem I had at that time was I did not know what it took or how to raise capital from friends and family. Now I know how to do that. So I think instead of me wholesaling properties like I did in the beginning, which was great because it helped me build my war chest, what I would do is actually go out there and start raising capital from friends and family to be able to buy the properties instead of wholesaling them myself.
All right. What's the thing you're most excited about in the next year?
WeLend's growth. I mean, look, we're having great pains, and the pains is the fact that we're getting a considerable amount of loan volume, but we're very selective as to what loans we make and with what borrowers we deal with. We only want to deal with borrowers that have very good deals on their pipeline or have experience, right? Because a lot of times an inexperienced borrower, it doesn't mean that they're not a good borrower. It just means that they have to have a good deal for them to have cushion for anything that goes wrong. So, our volume has been growing. We've been having great pains. We're entering into a new space in the sense of our loan volume. And I think the one thing that I'm excited about is to see where WeLend will go in the next, not only 1 year, but the next 5 years. Super excited to see it.
All right. On that note, the last question, where do you see yourself in 5 years?
It's a great question. I wouldn't say on an island sipping a margarita. No way. I think I'm the type of guy that I'll be 120 years old, working in the office, pushing my kids to do the same. So in 5 years, I see myself doing exactly what I'm doing today, going out there, raising capital from investors, from accredited investors, and being able to make the loans that I'm making today, but also being able to securitize the loans directly. Because what we're doing today is we're selling the loans to Wall Street, to large institutions who then securitize the loans on their own. I want to be able to do that on my own. We have the resources and the ability to do it. The only thing that we don't have is the time that we need to dedicate, and that's exactly what we're doing. And I think in 5 years, that's exactly where we're going to be.
All right, amazing, Ruben. Before we sign off here, if people want to learn more about your lending or just follow you on social or anything like that, or maybe they're a realtor, or builder, investor, how do people contact you or learn more?
So they can visit us on any of our social media platforms. We discussed it. Our handle is at WeLend LLC. They could also visit our website at www.welendllc.com. We make contacting us very easy, very smooth. So feel free to reach out, and we would look forward to speaking to you, not only on your next loan, but also on potentially investing into WeLend as well.
All right. Well, thank you so much for being on the show today, Ruben. To all of our listeners and viewers out there, thank you. Please leave us some feedback, comments, and share this episode with people that you think would benefit from watching or listening. We'll see you next time. If you enjoyed this episode, be sure and go to hyperfastagent.com to learn about upcoming in-person and online events. And don't forget to share this show with someone that you think could benefit from hearing it, and make sure you subscribe on YouTube or anywhere that you can find podcasts.
Thank you for tuning in to this episode of the HyperFast Show. Subscribe to us if you want to make sure you get the latest and greatest HyperFast shows. And remember, we love reviews. Reviews help us bring better and better guests and improve our shows. So give us the good, the bad, and the ugly. We hope you enjoyed the show, and we will see you next time.
Hey guys, thanks for sticking around to the end. I hope you enjoyed that video, and if you want to see more, click right here. And if you want 100 real estate tips from my best-selling book, click right here to download them instantly. And if you're new to this channel, click below to subscribe and turn on post notifications so you don't miss out. And leave some comments about what you think on the videos.